Hello traders, Rich here, and here's a quick but detailed update on USDCHF. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, USDCHF has been overall bearish, making low lows and lower highs, and we are currently in a correction phase, retesting the previous resistance, which has been acting as support previously, broken downward, so now it's acting as a resistance zone. That's why we'll be looking for trend following sell setups on lower time frames. If you zoom into H4 time frame, you can see that we have been bullish after we have this big impulse. We are currently in a correction, making higher lows and higher highs, and for the bears to take over again to start the next impulse movement to push lower, we need to see a break below this previous major low from H4 time frame. Meanwhile, we are bullish from a medium term perspective, retesting a big resistance from a long term perspective. That's why we'll be also looking for short-term sell setups as price approaches these upper highs and dive inside the resistance zone from weekly time frames. So we've got two possible scenarios. First, I'm waiting for this to look for a sell on lower time frames, just like I did here, or wait for this break and then on the retest of it, looking for a trend following sell. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, EURJPY has been overall bullish from a macro perspective, making higher lows and higher highs trading inside this big wedge pattern. And we are currently sitting around the upper bound of it, which I consider an overbought zone. Moreover, we've got the 150, which is a strong resistance and round number. That's why we'll be looking for sell setups on lower time frames, especially that we also got this shorter term channel also around the upper bound of it. If you zoom into daily time frame, that's the last major low. If broken downward, we'll be expecting a long-term bearish movement, just like previously. Below broken downward, we have been bearish. High broken upward, we have been bullish, and so on. But for now, from a short-term perspective, we are also looking for sell setups around the 150, as mentioned previously. If you zoom into H1 time frame, we can see that we've got a head and shoulders pattern forming. First, the bears were in control, the bulls took over, and now we're waiting for the bears to take over again. In this case, of course, we'll be going for a short position. Our trigger would be a momentum candle closed below the neckline of the head and shoulders pattern. The stop loss would be above the previous swing high, and we target a 1 to 2 risk to reward ratio at least to have an edge over the market from a risk management perspective. Of course, meanwhile, until the sell is activated, EURJPY would be bullish and we can still trade higher and higher before we trade lower. Best of luck, and I'll see you hopefully on the next one.